Hello viewers, in this video I'll be going over the S&P 500 ETF ticker symbol SPY. Today we're down close to 2% and we have about 2 hours left in trading. On the 1 hour chart we touched the oversold territory on the RSI and the 1 hour MACD has turned negative. On the 4 hour chart we will see that we still have not approached negative MACD yet, but we may soon encounter it. And we also have not reached oversold RSI. And as you can see from this time frame, we have a possibility that this uptrend is still intact because we still have higher lows as indicated on this line. So the lowest low was made in August 5th, and then second lowest low was in April, or August 15, and then today. As long as we don't breach and close below this trend line, this uptrend is still intact. So on the daily chart, we still have some room to play if we were to move down lower. The moving average, the 200 moving, actually the 150-day moving average act as support, and the 200-day moving average act as a real support test. And we still are quite far away from it, but again, anything can happen in the next couple hours or even over the weekend. So news about the trade war was increased by rhetoric on both sides. China increased tariffs overnight, and Trump tweeted out hours ago that US should leave China, all US companies leave out of China and not do business with them. So if we do increase this trade rhetoric, of course we'll head lower, and I do see the 200-day moving average act as support. If we do move down lower, that price movement is roughly around 2.3% move down. But if we do move on higher and have higher lows, I do see the first resistance is the 50-day moving average, this yellow line, and is at the price of $294.50. So if we were to move on higher, that price movement is roughly around, let's see, it is around 2.8% move up. So again, let's check the weekly chart. We are still in quite a predicament, but we still have higher lows. That's on looking for at the moment. If we do breach down, that's definitely a concern that we may encounter on lower end. So let's head to the forecast model. So on here I go day by day, where the S&P 500 will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. Which one of these forecasts we should focus on? Ideally, the model that looks similar to the current trend right here. And this trend, I believe, is the best match to the current trend. I'll point out why. So what we have here in the beginning of trend, we start off on the bottom Bollinger Band right here, and then we proceeded to move in an uptrend for several days above the middle Bollinger Band, and then we broke down to touch the bottom Bollinger Band right here, once more right here. In between these two, we see an attempt to touch the middle Bollinger Band, but not quite. So we have a blue circle, and then right towards the end, we were able to revert to the mean, touch the middle Bollinger Band. But we proceeded to move down lower. So we see this trend shaping exactly the same. So what we have in the beginning, touching the bottom Bollinger Band, and then we proceeded to move on higher for several days, and then quickly broke down to touch the bottom Bollinger Band right here, and once more towards the end. And on the current trend, we have not reached a third bottom Bollinger Band, but there could be a definitely possibility we may see it soon. So we want to get this last flush of oversold territory counted for, and then let's see if there are buyers in the market. So we have these, we have 1, 2, 3, 4, 5, 6, 7 points, and 1, 2, 3, 4, 5, 6, maybe 7 if we do touch the bottom Bollinger Band once more right here. So that could be a possibility. This current trend, or the trend in question, is a bit more forward looking, so we could possibly see more downside. And let's head to the forecast model. So this forecast dates back to April 12, 2013 to July 9, 2013. So where did S&P 500 went to back then? S&P 500 was up 2.2% back in April 12, 2013 to July 9, 2013. But another way or to account for is we do not have this touch on the bottom Bollinger Band or this drop on the current trend. So do account for the percentage to be a little bit lower. Once we do have this touch on the bottom Bollinger Band, I do see that we have a good reversal and head on higher, or recovery, or possibly another attempt to hit the middle Bollinger Band once more, or reversion to the mean. So that is it. If you enjoyed this content, feel free to like, subscribe, comment, and thank you for watching.